This is a daily review for the day of Tuesday, April 21st. This will be a New York session review. Start looking at price, obviously trying to understand what happened coming inside of New York. Right, what did Asia, what did London do? What did the opening price do? Obviously, the key levels that I talked about coming inside of the day were the range high and the reaction around it. Right, so does it create a divergence and then reject, such as it happened here, or does it create strong closures, fair value gaps at key times of day, such as in New York, right? Like a 9:30 manipulation into expansion leaves fair value gaps behind, and 10 a.m. trades into it and it expands from it. Right, so this was number one, or and sorry, this was the premium period of interest, and the discount period of interest was the bullish order block. Right, so if we look at the previous day's range, I can see that it was an accumulation phase as price spent the most amount of time inside the range, around 50% of the range, and that's where there's a bullish order block that cuts through the range. Right, so this was the level of interest for the day. Right, it doesn't mean that price needs to interact with it to create an open low high close or an open high low close. Right, for all it mattered, this could have been enough and it would have continued higher for the day. But if it is interacted with, then usually that's where the good trades will form. Right, the high probable setups, that's usually where they're going to form, all depending on obviously the profile of day and the drawn liquidity. So we can go down on the 5-minute chart and look at the session profile starting from 10 a.m. But we'll analyze also the opening range to understand where we are inside the 10 a.m. open and what its price is doing. So overall, obviously, we come from the pre-market highs that created a divergence above the range high, broke the structure, and from there, 9:30, the opening range opens in the vicinity of the London lows. Sorry, these are the London lows, and then overall relative equal lows inside of the Asia session, right, and also near the daily open. The market opens at 9:30, sweeps the range, and starts expanding into 25% of the bullish order block. Right, remember, this is the bullish order block from the previous day's range. So price, we can look at this from a 1-minute perspective. Alright, 9:30 opens, spikes above, trades lower, and then builds a consolidation phase around 25% of the bullish order block. And from there ends up breaking structure. Right, it breaks the structure at these levels after having created a divergence with the S&P 500. Right, so divergences that happen inside of the opening range are always significant, and eventually ends up, right, it first finds resistance at the high of the bullish order block, retraces inside of a fair value gap in an order block, then breaks above the bullish order block, right, and reclaims the high of it through a fair value gap through an order block, and trades higher towards the drawn liquidity, which was the high of the 8 a.m. hourly candle. Now, why was this the drawn liquidity? Well, I don't know. There could be so many reasons. Right, overall, right, we can put standard deviations and see that price ended up projecting around 2 to 2.5 standard deviation. But to me, the reason is not that important, right? Like, why this high or why this high? especially inside of the 10 a.m. power of 3, many times you'll see that sometimes simply a hourly high is enough to reverse the range, or at least to retrace the range. Obviously, it all depends on the profile of day. So 10 a.m. opens, and what we can do also to view the range that we come from, see what's important inside of the range, we can go back on a 5-minute chart. For the moment, I'll remove the quadrant of the order block. We can view at the profile of the curve that we're trading into, right? The left side of the curve, since we have at these levels a high, and since the opening range created no, sorry, this was not the opening range. This was the 10 a.m. power of 3 created divergence above an hourly high. Sorry. This leads to, right, we can see where price spent the most amount of time inside of the range, right, consolidating essentially around 50% of the range, right? So this was an early sign that the day was going to end up being some type of seek and destroy profile, or a New York reversal at worst, right? But overall, I had an idea it was going to be high resistance because of the overall range, right? Price essentially today simply retraced inside of, I believe, 50% of the 3-day range look back, right? That eventually in the PM session creating a divergence with previous day's low, right? So this is something that I'll cover later inside of the outlook. Right, but coming inside 10 a.m., right, the POC is able to tell me that the order block of importance coming inside of 10 a.m. is these down close candles, right? The 9:30 and 9:35 down close candle. Why? Because at the 10 a.m. open, we're already trading above it. Right, the 9:55 5-minute candle closed above this range, and now this becomes a bullish order block. Right, the draw on liquidity until invalidated is, which hourly high is there in the range. There's the 9 a.m. highs, right? So relative equal highs here at 9 a.m. with 9:30. Then you have the 8 a.m. high, right? And then you have the daily high, pre-market high. So one of these, right, you want to see the reaction, everyone it trades to one of them. Does it have strong closes, displacement through them, or does it find resistance through the form of divergences, right, or simply high resistance price action? Well, obviously this order block here has a lower time frame breaker, right? We have the wick, the shakeout before the dump, right, and then trades higher from there. So since this is a lower time frame breaker, this tells me that very likely price will be sensitive around it if it's revisited. Right. Yes, you can measure the entire order block, which was probably helpful, say, to analyze this range here. But for early AM, early 10 a.m. power of 3, sorry, when it opens, right, that's the most relevant PD rate inside of the range as we've looked at. Right, this is where price spent the most amount of time in the range, and now in the range that we are when 10 a.m. opens, the most relevant PD rate, which is located around the range of accumulation, is the bullish order block. Okay, so its wick is important at these levels. And now we can look at this price action on a 1-minute chart. Right, so 10 a.m. opens, consolidates, revisits 25% of the wick of the bullish order block, and from there expands, builds a range, sweeps the range, and most importantly creates a divergence above a hourly high, and from there ends up breaking the structure, right? So this here looks like the 2022 model: sweep, higher time frame divergence. Key time also, right? 10 a.m., which is a key time of day, early inside of the power of three, the 4-hour power of three. But if you went long today, say at these levels, right, I think that was the right trade to be in at the moment until obviously this happened, right? Once this happened, then that was an early sign to get out, right? If you're long in here and you didn't have a chance to get out at these highs, it's probably better to try to break even as much as possible. Right, especially the fact that it creates fair value gaps through it, right? There's a breakaway gap and then a fair value gap through the range, through the low of the order block, right? That's pretty significant. And so at these levels, the good couple opportunities also. I believe the market here created an internal divergence with the S&P 500 inside of the fair value gap, inside of the breaker, inside of the order block, after the sweep. Right, and meanwhile, what was price doing? It was accumulating shorts inside the wick of the order block. Right, the price went from expansion to consolidation to expansion to consolidation. Right, and you can tell that it's expansion because of the fair value gaps that it leaves behind. Right, so if you did not have a chance to be involved inside of this trade, right, inside of the opening range, you can see inside now here the long was high probability because we were in discounted levels. We saw how price reacted to 25% of the bullish order block, creating a divergence, breaking structure, and then claiming the high of it here through a fair value gap and an order block. Right, so if you didn't have a chance to get involved at these levels, well, then here was presented another great shorting opportunity. Now, to me, the best one is this one, right? In the moment, if I would have taken the trade, I might have been too demanding and asked for 50%, right, and completely missed the trade. But I would have been fine with that. But overall, this was probably the best trade, right? When the wick here gets reclaimed as a breaker, right here, this series, then right, you had the range that led to the shakeout that got reversed, right? Price comes back to it, uses it as support, but eventually here when the structure shifts, now uses it as an area of accumulation for shorts, expands through it, uses it as an area of accumulation for shorts, right? So it has reclaimed the resistance level. Right, so great trading opportunity, and the drawn liquidity being the relative equal highs, right? That's an easy target for this type of reversal. We can put some standard deviations up also and see how those look like, right? They pointed right to the low of the range. And then eventually, right, this is where now we have to go back for the 11 a.m. power of 3 and the 12 a.m. power of 3, right? So the remaining hours of the 4-hour power of 3 and see if there's any opportunities there. We have to go back to an hourly chart and look at the quadrants of the order block of interest for the day. Right, so then if we look at the 11 a.m. power of 3, interacts with 50% of the bullish order block and creates a bullish swing to Z hourly profile. And then eventually the 12 a.m. profile, right, this is through a fair value gap. Price comes from an expansion phase to a consolidation phase. We know coming inside 12 that we have a consolidation phase because the hourly profile of 11 a.m. was bullish, right, swing to Z here. So this was an accumulation phase, and this was preceded by expansion. So continuation lower is still likely to happen, which is provided at 12 p.m. Sorry, right here creates a series of order blocks, bearish order blocks around the quadrants of the hourly bullish order block, the P area of interest for the day. Right, you can see how trades to the level, right, creates order blocks around quadrants, and eventually expanding lower and closing back in the range. Right, followed by a bit of a crazy PM session here with a seek and destroy type of profile. This is where price ended up making divergence at the previous day's low, right? And from there created an inversion, reclaiming 50% of the hourly bullish order block, right? And then closing inside of the range from there. Expansion to consolidation.